Welcome to Capital Investments, where we provide you with valuable information on investing in various assets. Today, we're going to talk about how you can invest in gold. Gold has been a valuable asset for centuries and is still considered a safe haven investment option. It is widely used in jewelry, electronics, and several other industries. Moreover, it has a low correlation with other asset classes like stocks and bonds, making it a great way to diversify your investment portfolio. So, without further ado, let's discuss how you can invest in gold. 1. Physical gold. Physical gold is one of the most traditional and popular ways of investing in gold. It involves purchasing gold in the form of bars, coins, or jewelry, which you can hold in your possession or store in a safe location. Let's discuss the various ways you can invest in physical gold. Gold bars. Gold bars are the most common form of physical gold investment. They are available in various sizes, ranging from a few grams to several kilograms. Larger bars are usually cheaper per gram but are also more challenging to sell in small quantities. Smaller bars, on the other hand, are easier to trade and can be more liquid. It is essential to purchase gold bars from a reputable dealer to ensure their purity and authenticity. Gold coins. Gold coins are another popular way of investing in physical gold. These coins are usually minted by government agencies and are available in various sizes and denominations. Some of the most popular gold coins include the American Gold Eagle, Canadian Gold Maple Leaf, and South African Krugerrand. Gold coins are easier to trade and can be more liquid than gold bars, making them an ideal investment option for smaller investors. Gold jewelry. Gold jewelry is a popular way of investing in gold, but it is not considered a pure investment since it involves a markup for the design and craftsmanship. The price of gold jewelry is not only influenced by the gold's purity but also the design, brand, and other factors. It is crucial to purchase gold jewelry from reputable jewelers and to be aware of the gold's purity and weight. Safe storage. Once you purchase physical gold, it is essential to store it safely to protect it from theft or damage. You can store your gold in a bank locker, a safe at home, or a secure location that is not easily accessible. It is essential to take adequate precautions to protect your investment and to have insurance to cover any potential losses. Selling physical gold. Selling physical gold can be challenging since it involves finding a buyer who is willing to pay the right price. It is crucial to keep the receipts and other documentation that proves the gold's authenticity and purity. It is also essential to sell gold to a reputable dealer or jeweler who will pay you a fair price. Investing in physical gold can provide a hedge against inflation and diversify your investment portfolio. Whether you choose to invest in gold bars, gold coins, or gold jewelry, it's crucial to do your research, purchase from a reputable dealer, store your investment safely, and sell to a trustworthy buyer. 2. Gold ETFs. Gold ETFs, or exchange-traded funds, are a popular way of investing in gold. These are mutual funds that invest in physical gold and are traded on the stock exchange. Gold ETFs are a cost-effective and convenient way of investing in gold, providing investors with the benefits of physical gold investment without the need for storage or security concerns. Here's how you can invest in gold ETFs. Research and choose the right gold ETF. The first step in investing in gold ETFs is to research and select the right fund for your investment needs. Some of the popular gold ETFs include SPDR Gold Shares, GLD, iShares Gold Trust, IAU, and Aberdeen Standard Physical Gold Shares ETF, SGOL. It is essential to understand the fund's investment strategy, fees, and performance history before investing. Open a brokerage account. To invest in gold ETFs, you need to have a brokerage account. You can open an account with a brokerage firm that offers trading services for gold ETFs. Some of the popular brokerage firms include Charles Schwab, TD Ameritrade, and E-Trade. It is essential to compare the fees and services offered by different brokerage firms before choosing one. Fund your account. After opening a brokerage account, you need to fund your account with money to purchase gold ETF shares. You can fund your account by transferring money from your bank account, wiring money, or writing a check. Place your trade. Once you have funded your account, you can place your trade to buy gold ETF shares. You can place your trade online or through a broker. It is essential to ensure that you have selected the correct ETF ticker symbol and the number of shares you wish to buy. Monitor your investment. After purchasing gold ETF shares, it is essential to monitor your investment regularly. You can track the performance of your ETF and adjust your investment strategy based on market trends and your investment goals. Sell your shares. When you want to sell your gold ETF shares, you can place a sell order online or through a broker. You will receive the proceeds of the sale in your brokerage account, which you can withdraw or use for further investments. In conclusion, investing in gold ETFs can provide investors with an easy and cost-effective way of investing in gold. It is essential to research and choose the right ETF, open a brokerage account, fund your account, place your trade, monitor your investment, and sell your shares when needed. As with any investment, it is essential to understand the risks involved and seek professional advice if necessary. 3. Investing in gold futures. Investing in gold futures is a way of speculating on the price of gold in the future. Gold futures are contracts that are traded on exchanges, such as the Chicago Mercantile Exchange, CME, where buyers and sellers agree to buy or sell gold at a future date and a fixed price. Here's how you can invest in gold futures. Learn the basics of futures trading. Before investing in gold futures, it is essential to understand the basics of futures trading. Futures trading involves speculating on the future price of an asset, such as gold, by entering into a contract to buy or sell the asset at a predetermined price at a future date. It is essential to understand the risks involved, such as price fluctuations, leverage, and market volatility. Open a futures trading account. To invest in gold futures, you need to open a futures trading account with a brokerage firm that offers futures trading services. You will need to provide personal and financial information and undergo a risk assessment before opening an account. Fund your account. After opening a futures trading account, you need to fund your account with the required margin deposit. The margin deposit is a percentage of the contract value that you need to deposit with the brokerage firm to trade in futures contracts. The margin requirement varies depending on the exchange and the contract specifications. Place your trade. To invest in gold futures, you need to place an order with the brokerage firm to buy or sell gold futures contracts. You can place your trade online or through a broker. It is essential to ensure that you understand the contract specifications, such as the contract size, delivery months, and tick value, before placing your trade. Monitor your investment. After placing your trade, it is essential to monitor your investment regularly. You can track the price of gold futures and adjust your investment strategy based on market trends and your investment goals. Close your position. When you want to close your position in gold futures, you can place an order to sell your contracts. You will receive the proceeds of the sale in your futures trading account, which you can withdraw or use for further investments. Investing in gold futures can provide investors with a way of speculating on the future price of gold. It is essential to learn the basics of futures trading, open a futures trading account, fund your account, place your trade, monitor your investment, and close your position when needed. As with any investment, it is essential to understand the risks involved and seek professional advice if necessary. 4. Gold mining stocks. Investing in gold mining stocks is a way of investing in companies that are involved in the exploration, production, and sale of gold. Gold mining stocks can offer investors exposure to the gold market and the potential for higher returns than investing in physical gold. Here's how you can invest in gold mining stocks. Research and choose the right gold mining stocks. The first step in investing in gold mining stocks is to research and select the right stocks for your investment needs. You can use financial websites or professional analysis reports to identify gold mining companies that are financially sound and have strong growth potential. Some of the popular gold mining stocks include Barrick Gold Corp, Gold, Newmont Mining, and Anglo Gold Ashanti. Open a brokerage account. To invest in gold mining stocks, you need to have a brokerage account. You can open an account with a brokerage firm that offers trading services for gold mining stocks. Some of the popular brokerage firms include Charles Schwab, TD Ameritrade, and E-Trade. It is essential to compare the fees and services offered by different brokerage firms before choosing one. Fund your account. After opening a brokerage account, you need to fund your account with money to purchase gold mining stocks. You can fund your account by transferring money from your bank account, wiring money, or writing a check. Place your trade. Once you have funded your account, you can place your trade to buy gold mining stocks. You can place your trade online or through a broker. It is essential to ensure that you have selected the correct stock ticker symbol and the number of shares you wish to buy. Monitor your investment. After purchasing gold mining stocks, it is essential to monitor your investment regularly. You can track the performance of the stock and adjust your investment strategy based on market trends and your investment goals. Sell your shares. When you want to sell your gold mining stocks, you can place a sell order online or through a broker. You will receive the proceeds of the sale in your brokerage account, which you can withdraw or use for further investments. Investing in gold mining stocks can provide investors with exposure to the gold market and the potential for higher returns than investing in physical gold. It is essential to research and choose the right stocks, open a brokerage account, fund your account, place your trade, monitor your investment, and sell your shares when needed. As with any investment, it is essential to understand the risks involved. 5. Gold mutual funds. Gold mutual funds are similar to gold ETFs and invest in gold-related assets. However, they are actively managed by a fund manager who makes investment decisions on your behalf. Investing in gold mutual funds provides the benefit of professional management and diversification across several gold-related assets. In conclusion, investing in gold can provide a hedge against inflation and diversify your investment portfolio. Whether you choose to invest in physical gold, gold ETFs, gold futures, gold mining stocks, or gold mutual funds, it's crucial to do your research and understand the risks involved. We hope this video has provided you with valuable information on how to invest in gold. Thank you for watching Capital Investments. Let's hear your comments on what video you'd like us to cover next. See you on the next one.